Let's get to a few hot tickers moving on the Yahoo Finance platform. A crowd favorite always, Taiwan Semiconductor in focus. Companies out with earnings, Julian. The big headline here is some $4 billion cut in CapEx, but I would also bring up, too, the company's outlook for the first half of the year, not looking for much in terms of sales growth. You could make the argument that is as concerning as this CapEx cut. If Taiwan Semiconductor, the most valuable semi player in the industry, is calling out a weak first half, because of weak demand signals, best believe others are probably right in there with it.
Yeah, indeed. It was alarming when the company talked about that demand is softer than we thought 3 months ago. That's what the CEO, C.C. Wei, said on the conference call. And just to put some numbers around what you were talking about with those first quarter sales going to be at most $17.5 billion. Analysts had been looking for $17.9 billion. And then first half sales are going to fall as well. That decline in the first quarter sales is the first revenue drop that the company has had, if it indeed happens, in 4 years' time and then should rebound to slight growth for the full year. But, this cutting that they're doing, it looks like the market, Soz, is, that the market is saying, okay, that's enough to offset some of this weakness. We'll see if that sentiment continues.
And this goes back to what we talked about yesterday. The reason for the cautious outlook in the first half is weak PC and smartphone sales. And this market, it doesn't suggest that those areas have bottomed in any way. That's where you're seeing challenges here. I'm also reading right now a good note on the folks over at Citi. They're still looking for things to rebound in the second half. But we're not getting any signal that demand will automatically reaccelerate for PCs and smartphones, which probably leaves Taiwan Semiconductor, Qualcomm, Broadcom, you name it, all these other chip players, and of course Micron in not such a good place.
One other thing that might be helping the TSM shares this morning, by the way, is gross margins were actually at a record 62.2%, up from 52.7% a year earlier. So a big expansion in gross margin. The company says that might not continue because of what's going on with rising prices. Also, it's ramping up production. It's got a plant coming in Arizona. It's also talking about building a second plant in Japan to expand its production. So we'll see how those plans sort of match with some of the shorter-term cutbacks in spending that it is doing. But interesting to see that gross margin number. I mean, we are seeing, in terms of the ripple effect across chips here, not a huge reaction, but a little bit of a lift. And then I was also watching ASML, which is a chip equipment maker that supplies Taiwan Semi, and that stock had been reacting as well, Saz.